Good afternoon and welcome everyone to the Trading Talk, the Uncensored live Q&A session. My name is Danny and I will give you the webinar today. Before we will begin, as always, I would like us to go through a quick sound check to make sure that the sound is on a proper level and that you can see the screen here, the graph here on my screen. And in the meantime, we will explain what will happen in the webinar using this lovely presentation. So the agenda is to first, we will begin the webinar with the previous questions that we have written here. And the second slide here is the true purpose of this webinar, which is the live Q&A. Here I can paste down the questions that you have and to give you the answer live on the chart. The next slide is more informative. We're just going to send you some links here to save you the trouble to find it by yourselves. But we added a few buttons here that I'm going to show you that doesn't even require you to use the links. You can directly from our interface get to those things, but it's good to have the links for users who are using different platforms such as MT4, MT5, etc. And the last slide in here is just to help understand analysis a bit better. To be honest, I'd rather use live data from the chart and not the example we have here. Okay, but we'll see how the questions, where the questions will take us. Okay, and it's important to know that any capital markets and trading information disclosed in this webinar is provided for informative purposes only. It should not be constructed or applied as an investment advice, recommendation, or a suggestion. Now, a very common question is if we can watch the webinar again, and the answer is very simple. All you gotta do to watch this webinar again is just to go to YouTube, find our channel, AvaTrade, okay, AvaTrade, and in our channel you're gonna find the recording of this webinar as well. And not, as I always say, you're not gonna only find the recording of this webinar, but many other useful content. Okay, such as analysis and risk money management, and a lot of useful content for you guys to enjoy in our YouTube channel. So I highly recommend you guys to check it anyway. All right, so to open the webinar, we're going to begin with, as I said in the introduction, we're going to begin with the previous questions, which are these questions, and we'll see what's the best way we can answer them with our lovely notepad. Okay, what we're going to do is we'll take let's first go through the questions. Perhaps we would like to answer them in a non-linear order. So the first one is it possible to trade with $100? Of course it is, but we're going to see that. Do I still need to know how to trade if I am using signals? Of course. And again, we're going to see that on the chart. Will I make more money if I spend more time on the charts? Who knows? Will I be stronger if I spend more time in the gym? Maybe, right? But it depends what I'm doing with my time in the gym. Maybe just playing around. Okay, we'll see that. What's the most important principle in trading? Oh, that's an interesting one. Okay, so to begin with, we'll take the first one just as easy. We're gonna paste it in our notepad, and right away let's find ourselves a nice instrument for the demonstration of today. In maybe the commodities, we don't have the US market available at the moment. Okay, it opens in 2 hours. As you can see, a nice way to know, by the way, if a particular contract is open is just to click on the name of what you want and then click buy or sell to expand the right side menu. And in the right side menu, as you can see, there is instrument details, and in instrument details you can see the time. Okay, sometimes we need to give it a moment. Okay, you can see the times here. And it's also telling you here with a timer that it's open in 2 hours and 23 minutes. Okay, that's how you can find out very easily when the market is open for a certain instrument. And now with our question, unfortunately, the stocks are unavailable now. We can either go with indices or cryptos or Forex. Let's go with one of the commodities, maybe agriculture and maybe cocoa or coffee or maybe corn. Yeah, that's not bad. Expand the chart. Click here to squeeze down the chart. Maybe also click on buy or sell so we can better design our position and place just roughly here, nothing too crazy, just visibly having support and resistance in our minds. Okay, maybe a center line as well here, and also the previous high. Okay, maybe that one is maybe more relevant. Okay, so we've got this. Now, if we're looking at the question here, is it possible to trade? Of course, this question is a bit philosophic, right? Is it possible? Of course, the physical um, the physical ability to trade here is by something called the margin impact. Okay, as long as I have this money available in my account, this amount available in my account, I can open the position. Now, additional question will be, even if I can use my $100, we're going to see in a moment. If I can use this $100, but it will require me to use my whole amount, is it something that I would like to do? Okay, so what we're going to do now is we're going to reduce the lot size to 0.01, and then we're going to write down the price for 1 unit. As we can see, if it's a buy, it's 458.5. Okay, that's the price per unit. As we can see, 0.01, it means 1 unit. If we change it to 0.1, we have 10 units. And if it's 1, it's just 1 lot. That means 100 units. Then the value will be multiplied by that amount. Okay? The price will be multiplied by that amount. And this is how it provides us with this value. So, of course, 1 unit, the value will be as much as 1 unit. If it's 10, then it will be 10 times higher than the price for 1 unit. And if it's 100, it will be 100 times more than the price for 1 unit. Okay? With this in mind, we can see there is something here called leverage. Okay, so we're going to write down here number of units. Okay, so let's say in this case it will be 1. Number of units equals 1. Okay, and then the value equals the same, right? And then we have leverage. What the leverage does is it multiplies buying and selling, right? And if that means that my account will be multiplied by 10, I can actually divide the value by my leverage to know the margin impact. What does that mean, the margin impact? Margin impact is the necessary amount to open the position. Okay, not the money in the balance, not the money in the equity. The free margin is what I need to open the position, okay? Yes, so we're gonna write here margin impact. Used to be also be called margin requirement, but doesn't really, okay? The necessary amount to open that position. Very, very simple here. Now, okay, so because we can divide this value by the leverage, and then we get to this 45.85, okay? This way we can divide, and then this is what we get. Now, so this is a living proof. This, right? This position here is a great example to show us that it is possible to trade with $100. Okay, as we can see, corn is something that we can trade with $100. Now, the additional question will be, is this really a position that can give me something? Okay, so as an example, if I'll take the primary resistance line and I'll target it as my take profit, we can see that because we are $46 away from this price, okay, we can make or lose $46, okay? And if we take the same length, if we take the same length that we took for the take profit for the stop loss, and in a moment we will also explain how the just a second, we'll place it right here. Okay, it will be easier to move this guy instead, and we'll move this one a little higher. Okay, so our red line will represent the stop loss, and the green line will represent the take profit. Okay, and now as we can see, the green rectangle will represent the profit area and the red will represent the loss area. Okay, and with this in mind, we can understand that with 1 unit, if the take profit is far away, $46, we can make 46. If it's $46 away for the stop loss, we can lose 46. What does that mean? The take profit is a pending order. And if I design a certain price on the chart, what will happen is the platform will close it for me with a profit automatically. Same apply with the stop loss, just the other way around. So take profit stops it automatically with the profit, stop loss stops it automatically with a loss. Okay, and in the buy, of course, our intention is that the value will increase. This is why the take profit needs to be higher than the price. Yeah, it needs to be higher than the price, and the stop loss the other way around. In the sell, the take profit needs to be down and the stop loss needs to be higher. Okay, so we can see that in this case, we can gain 46 or lose 46, and that's fine. Let's not forget that if our balance would be 100, this will be 50% of my account. Yeah, so I'm actually using half of my available margin to make half or lose half of my account. Okay, risk money management wise, those numbers, those percentages are considered not considered casual percentage. Let's put it this way. Okay, for 50% is not something that I would design in my own trades. Okay, now if we take something a little more expensive than corn, okay, we can see the price for corn $4.58. Maybe we'll take something a little more expensive like palladium. Is that example? We'll click buy. Okay, we'll change it 0.01. Yeah, and we've already learned that the margin impact is what we're looking for. So the price per unit is 945 and 949 and a half. When having 1 unit, of course, the value will match the price per unit because we're only having 1. If it would be 10, so it will be 10. If it's 100, okay, we already know that. So that means that I can also trade palladium. I can trade palladium with $100. Again, I'm just in a moment. I will touch the additional question that we ask if we should do it or we shouldn't do it. Right now, we're just confirming if it's possible or not. Okay, to validate the question, because the question is not if we should or we shouldn't, if it's possible or not. And the answer is yes. We already saw with corn that we can do it. And now we see with palladium that we can do it as well. Let's take something a little more expensive. Let's go with Nasdaq just as an example. Maybe we could go with gold. I think this is a little, we jumped too high. Maybe gold is somewhere in the middle. Okay, but thanks to the leverage, no, still not enough. Okay, so gold is an example. If we're looking at the value for gold, again, the margin impact is what we're looking for. And if we see the value for 1 ounce at the moment is 2,900, okay, 2,900 match the price per unit. Yeah, that's because we have 1 unit. It's not always going to be like that when you have a different lot size. Keep in mind, this trick will only work with 1 to when one lot equals to 100. Okay, this way. Now, if we're looking at 1 unit, unfortunately, with $100, this is not a position that I can take. Okay, furthermore, even the position that I had with palladium, if I want to take another one, or I would like to extend maybe for 2 ounces or something like that, I won't be able to, because I'm already using 94% of my margin. Okay, just to understand. This is again with $100 balance. Is it possible to trade? So the answer to this is yes. It is possible to find an instrument to trade with $100. However, it is very challenging to make consistent profit progress due to because of risk money management and diversification that with $100 are very, very challenging. Of course, it's not a matter of possible or not, like the question describes, because we can see that it's possible. And of course, if I'm lucky enough to win all my positions, then I can make progress. But as you can see, it's difficult to diverse. If I want to diverse even more than one position, if I want to diversify, I need to do it very wisely. Okay, so it's very challenging to make consistent progress. Okay, with $100, that's my personal opinion. Of course, people can say otherwise, and that's completely fine. Okay, and the reason is, the main reason that I showed is the lack of margin that doesn't allow us to diversify, hedge, or basically anything else as an addition. Okay, now the following question: do I still need to know how to trade if I'm using signals? Absolutely yes. The signals are just instructions how to buy and to sell. The signals, they don't just a second. Let's go with oil. Okay, it's not a guarantee scenario with the signals. It's not a guarantee scenario. You see, we're in a buy type for the signal. At the moment, the market is bearish. Let's change it to the same validity. Okay, we can see at the moment it's bullish on the daily, but the overall trend is a little bit bearish, right? This is 3 days straight. Oil has been diving from 70.6, $4 down. Okay, and so why am I showing you this? Because the question here is asking if I still need to know how to trade. Well, of course, I need to know, to judge by the scenario, if this signal is something that I would like to use as a buy or sell. And as an addition, I must compare it with my balance and further do risk money management. Okay, at the moment, if I'll click here buy, I can. It's not a matter of, again, like the previous question, it's not a matter of if I can or I can't. It's a matter of risk money management. And at the moment, if I would be with, let's say, $100, okay, I won't be able to take the position here. Yeah, that requires, we already spoke about this in the past few examples. At the moment, 667. Maybe if I'll adjust it like this, then I can make it, if my account would have been with 100. Okay, and then we can see we can make or lose 7 or 5. Okay, but that's something else. That's also guidelines that I need to construct. But the point that I'm showing you this is to answer the question. Do I still need to know? The answer is yes, because using this signal, even if I get the analysis right, how do I make progress and how do I keep making consistent profits? So I need to know how to trade, at least the basics, some guidelines that will help me construct a plan. Okay, of course, the signals is something that I like to use as it's something that I think I also do my own analysis. Of course, there are two ways to use the signal. We can use it just like that, choosing a scenario, click buy or sell, and we are good to go. And another way is, of course, to take the additional step and further click on view signal, expand the chart, draw the lines, similarly to what we see here. Okay, 68.1, that's in here. Okay, we can flatten that out. We're clicking changing the coordinates. That's the first green line. Second green line is 67.5. Okay, we're gonna place that as well. And the third one is, okay, the yellow, the reference is 66.67 is the current price. And then we have 6615. This is something it's not going to be visible for us so much, but we'll try to match the picture here to the right. 65.2. Yeah, okay. Now those lines, as I have explained, are not mandatory in any way. They're not mandatory. It's our choice whether to do this kind of analysis, if to take the extra step or to use it as it is. And in the moment, with this picture in mind, we can further do our analysis and decide which scenario is better and what do we think about those levels. Okay, and if I'll decide to go with a buy here, I can do buy, and then I can change the lot size and I can adjust the take profit and the stop loss and use it as additional layer to my analysis. Okay, so to my opinion, the answer here is, do I still need to know? It is always recommended to know how to trade. To use the signals more efficiently and not just blindly, not just okay, let's leave it this way. I don't want to open it for additional interpretation. Just okay. Right, so in this case, we can carry on. Of course, it doesn't mean anything about the success of the signals. Okay, if I look at the signal section, I can also see when the signal was produced, and if I know how to trade and I know at least a little bit to read the market, I can know if this signal is heading to the right way as described in this scenario, which is in a buy. As you remember, 5 minutes ago, I've explained that in a buy scenario, we want the value to increase. So when I open the chart, if I have a little bit of an idea how to analyze here, I can understand that this is a reversal from yesterday, and then possibly this scenario makes sense. If I don't know how to trade, so I wouldn't know that to do this comparison. Okay, I would just blindly use the buy or sell. So it means that it helps me use the signals more efficiently. And one more thing to pay attention is that the signal production time. And to know that the newest one are here. And as we go down, this is the oldest one. Okay, and also it's important to remember that the signals are provided by the trading central and not manufactured by us. The following question is, will I make more money if I spend more time on the chart? The answer is unfortunately no or yes. No, neither. Neither, and I'll explain to you. Yes, naturally, if I know how to trade, I will have additional time to analyze and trade. However, spending more time not always equal to making more money, as per using our time in different ways, which can lead to profit or loss. And I will explain that what I wrote here. The same example that I use with going to the gym. If I'll go to the gym and I don't have any trainer, I don't have any plan, I'm just lifting random weights. Okay? So does that mean that I will be stronger and make progress with my with my body? Not necessarily, right? Of course, if you compare me with somebody that goes to the gym once a month and I'm at the gym every day, I'm not I'm just using it as a metaphor, right? But if I go to the gym every day, so naturally I'll be more time at the gym next to the equipment, and I have more access to maybe train or something like that. And that person who is once in a month, he has less time. Now, of course, if we both spend the same time at the gym, but one of us is working with a plan, with a trainer, with a certain dietitian, so of course this will be more efficient. So what I'm telling you guys here is that it doesn't depend on the time that you spend on the chart, but how you spend the time on the chart. If you're putting it into analysis, risk money management, and working with the plan, or you're just randomly enjoying the market, which is not a bad thing, by the way, to read the news and to be well aware of what's happening with the economies, but it's not always equal to more money. Doesn't mean that if I spend 7-8 hours a day on the chart and I don't do anything effective with it, I'll make more money. Okay, I can spend less time, I can make it quick, maybe look at a certain event or something that caught my eye, and I come with an agenda and not just random analysis. Okay, so that's my personal opinion. Of course, if I don't spend any time and I barely trade, and yeah, so that's like I barely go to the gym. Again, using the same metaphor. I hope it makes sense. Okay, besides that, and I've said many times in this webinar and previous, our AvaTrade can assign a senior account manager on your profile to assist you with the journey. So all those things regarding guidelines, risk money management, analysis, all those things can be addressed to a senior account manager that can provide you with assistance. Now, if I look at the next question is, what is the most important principle in trading? Okay, now, some may say that the most important principles in trading, what is that? Is to make more than you lose, right? Because it doesn't really matter the amount as long as I make more than I lose. Is that correct? Well, first of all, I must remember that concept. In trading, I can lose and gain. Okay, and I think that the most important thing in trading, at least for me, is to always have a plan B. Why? Because the market is volatile and the analysis is not always immediate. I can analyze a certain result that I think will have an impact on one way, but the market can shift and move otherwise. So does that mean that now I'm not going to make profit and lose? Not necessarily. That depends on how I prepare myself. To have additional margin and to maintain a healthy amount of margin in my account is one of the ways to ensure, if I want a second scenario, if I want to hedge, if I want to diversify, or anything from there, then I have the ability. Okay? As I showed you in the first part of this webinar, the margin impact, let me just open again. I think the first example that we used was corn, right? Okay, so if we look at we look at the corn again, and I will bring that down. I'll brought that down to 0.01. We can see that the available margin, the necessary margin in here is $45. Now, of course, with this account with $10,000, I'm not too bothered by those $45. I have plenty of margin left to use. But if my account would have been with 100, okay, as an example, and I understand the example we used in the beginning, right? It was like this, and that was like that. Okay, and I use the same numbers as before, and I'm looking at half of my account used in margin, half of my account with the profit and loss. Okay, so this is something I need to remember to have a plan B. If this scenario here doesn't end well, if it goes to the stop loss, I'm gonna be left with $55, and for my next position, this will be more than 90% of my account. Okay, so if I have additional margin, much more than that, maybe 10,000 as an example, then this position is something that I can easily take. And if I want to take additional, maybe to trade something else, maybe to hedge something on here, so I have the ability. I have the fuel to do it. And the other thing is, of course, the knowledge. So the most important principles in trading for me is to always have sufficient margin, always not to be on the edge, because when I'm on the edge, it doesn't allow me to assess properly. It doesn't allow me to do risk money management properly. So the margin is an essential part. And the second part is, of course, knowledge. Knowledge, as the question that we see here, if I'm using signals, do I still need to know how to trade? The answer is absolutely yes. Okay, still is required to have a little bit of idea how to judge if the signal is suitable for you in the buy, in a sell scenario, to do a little bit of analysis. And okay, but this is, as I explained, this is a choice. If I don't want to do it, I can use the signal, 20 seconds. Let me show you again. 3 clicks, really, just one. You see, this is how you open it. Another one to choose the scenario. The third one, I can already open the position with the signal. It's really that simple. Okay, so the analysis part is something for your choice. As an addition to that, I'm gonna share with you some links that I showed in the beginning of the presentation, just to save you the trouble to find those things by yourself on the website. And in here, I'm gonna write down what's the most important principle. So to have enough margin for plan B and to assess the position to suit to my strategy. Okay, as I said, the proportions, the ratio, the numbers, to know that it makes sense and I'm not using too much, I'm not aiming too high, and then okay, it can affect my risk money management. Now, this slide here, the link here will take you to the education section for additional education. There you can find a lot of videos and content and articles about trading, and you can further educate yourself. Don't worry, like I said, I'm also going to show you how to get there from the website. But for people who are using a different interface, oh, I almost forgot to tell you guys, this interface here is actually something we have on the website. You don't even have to download or install or do anything. You just log in with your email and password, and that's the first thing that you're going to see. Sometimes it looks like this with the chart folded down, but the idea in general is that you can get here just by logging in with your email and password and trade. Okay, that's the web trader. It's called the web trader, and we also have it in the app. It's called the AvaTrade trading app. Looks very similar. The features are very similar. And okay, if you enjoyed the interface in here, so you can do it there on your phone. Okay, the second link here is what I've pasted to log in and make a deposit. The third one is for the FAQ and the help center, and we have this one is for a real account, and the last one is for the academy. And as I showed, and as I said, I'm going to show you how to get there from the website. Okay, so you see there is here at the bottom left, at the end of this segment, okay, you see that's the second segment with the play button here. Looks like a YouTube icon here. Okay, the first one takes you to the, the second one takes you to the academy. And the first one launches inside the website. It launches the tutorials. We see here platform review, trading basics. We have here stocks market fundamentals. There is a lot of useful content for you guys right here without leaving the website. Really, just like that, you can enjoy for free that content. Which I highly recommend you to check. And besides that, of course, I would like you to invite you guys to join us for the next live Q&A next week. I hope that today you've learned at least one thing new from this webinar. And that's it. Best of luck with trading. Have a wonderful week and see you next time.